it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to become a full-time swing trader. What is that timeline to become one? So I hope you guys all enjoyed this. If you guys do, hit that like button, subscribe. And if you guys are watching and you're like, who is this random guy? My name is Carter. I am a full-time swing trader in the stock market. And with that being said, we do have an amazing school where I teach people my strategies, my approach when it comes with navigating the stock market. So check it out down below. We're doing our Black Friday sale for 51% off. Code Black Friday for 51% off. So, sign up, click that link, guys, and let's jump into this. So like I said, we're going to be talking about how to become a full-time swing trader. Code Black Friday, 51% off our school. And the school, we teach you how to find stocks and all that stuff because I get a lot of questions about that. Yes, and there is a group chat, lifetime access, one-time payment. And yeah. All right, so year one. Year one is the experimental phase, right? During this time here, what I would recommend doing here is to learn strategies without risking real money. You need to build confidence and consistency. So paper trading, for those of you that don't know, is using simulated money. Paper trading, in my opinion, is probably one of the most underutilized things new traders don't do. They expect to fund a Robinhood account or a Moomoo account with $1,000 and they expect to make $1 million. And I hate to say it, you have to treat it like college and like any other job. And what I mean by that is think of like a doctor, lawyer, engineer. Those people have hours and years of experience and practice, and I have that same mentality when it comes with trading. So you have to have that same approach. So the first year, honestly, is just paper trade. I recommend Moomoo, which is the broker I use. You guys can get up to 20 free stock by signing up with them. They're awesome. And at the end of this video, we're also going to be showing you guys a really, really good strategy that I use. And I'm already up, a little over, I think about $4,000 on the trade. So stay tuned for that. But let's jump into year number two. So year number two, after you guys, paper trade for that year time, figuring out what type of trader you want to be. Because, during that first year of paper trading, maybe you're not drawn to swing trading. Maybe you actually like day trading, which is completely fine. You have to, just experiment. So year two is kind of after you have a decent strategy, you invested into some education, you have, some confidence, you understand how to use the platform, the software, and you have an idea of how to trade. Year two is honestly developing the emotion side. Because trading, in my personal opinion, over about 85% of trading isn't like learning technical analysis or fundamental analysis or entry and exits. It's emotion based. And you'll see this pretty much instantly when people don't have, when people have the wrong emotion with trading. You could have the best strategy, the best setups, but you'll still lose money. So year two is starting a small account with trading. So this is transitioning from paper trading to using real money. And this is where you're going to be very, very emotionally involved with your trades, because every stock you buy, you're going to feel the emotion behind it. And it's hard to explain the emotion side until you've done it. And so the best recommendation I would give you if you're starting to transition into that, small account trading is to build a checklist. Build a checklist to ensure that you follow a checklist every single time before you enter a position. What this does is it eliminates you being like, oh, should I hop in? The stock doesn't follow the checklist, so we're just not going to trade it. Doing that is a very simple way to help your emotions and really just scale up your profit. So this is kind of like a time frame that I would recommend doing. Months 1 to 3, start that small account with Moomoo, which is the broker I love. They offer fraction shares as well, so you can even start with smaller than $500 to $1,000. You're going to want to risk about 1 to 2% per trade. In an ideal situation, it's more along the lines of risk versus reward. So you're risking 1 or 2% to make, 3 or 4 or 5% on your money. Months 4 to 6, you're going to scale up gradually. So if you're consistent with your paper trading, you can be consistent with your small account. You just got to, build that checklist out. scale up gradually as profits build. Focus on consistent wins over big gains. So this is huge. If you guys could learn one thing from this video, I want it to be this. A lot of people think that with trading that every trade is $1 million trade. And I hate to say it, but most of your trades, and what makes a successful trader successful isn't these, 100% returns. It's honestly these 1, 2, 3% returns that may seem small that compound over the course of a year. So that's where, being consistent is incredibly important here. So the next thing here after you do that, months 7 to 9, diversify your strategies and sectors, test multiple positions simultaneously. So honestly, you really don't have to diversify your strategies as much. I would recommend having about 3 strategies. Anything over that, it's going to be very confusing for you because, you want to just be the best at 3. You don't want to be, decent at 10. You want to be the best at 3. So maybe you don't trade as much, but when you trade, you're on it. And then months 10 to 12, you pretty much continue to work towards that full-time goals to ensure you're profitable and you're emotionally disciplined. Now, end of year 2, going full-time, don't put a timeline on this, right? I put year 2 because I think that's about average what most traders that I see make that transition do is at the end of year 2. But in order to go full-time, I would recommend this. Have proven trading strategies, stable income. So if you already have like a 9-to-5 job, you want your trading income to pretty much not double, but 1 times your 9-to-5 income. Doing that will help ensure that you can do this as a job. But the biggest thing here that I did and I would recommend is have an emergency fund of 6 to 12 months of expenses. So, a lot of people think that when I trade every single day, I am trading for my mortgage payment, my car payment. Yeah, I am at the end of the day, but it's a lot easier for me to almost have that. I have a pool of money and I just put every single week, every single month, the profits. And so it's not as much like I am trying to pay my mortgage. It's more just, okay, I have my mortgage paid because I have my emergency fund. How can I continue to add to this? It puts a very, very low stress on me when I know I already have it paid off, paid. And I think that's important, because having an emergency fund, if you don't, and you make that transition, you're going to be trading sloppy because you're going to be like, oh my gosh, I have a car payment due the 12th. It's the 7th of the month. I have, a couple of days to make $400 or $500. I got to trade compared to, okay, I already have it covered. If I see an opportunity, I'll enter it. And then the last thing is just have confidence, have discipline for full-time trading. It is an adjustment because you'll constantly feel like you have to be in positions, but just stick to your approach. And there's going to be a learning curve, of course. There is. I hate to say it, but there is. So you just got to have confidence, and build up discipline. So let's talk about a strategy here that we are in on, and one that I really, really love here. So this is a stock, Tesla. So Tesla here, what we've seen, for those of you that haven't been following the channel, is this huge explosion, right? Where the stock has gone right on this trend line. We've gotten great buying pressure off it, as you guys can see. So it hits this line, several times, establishing good support. The stock then went from about 217 to about 270 because of a good earnings, which is normal. And then it just popped up like crazy. It popped up just because of people and speculation, and it continued to rally for one reason, and that is emotion, the emotion behind this trade. And so looking at the hourly, you guys can kind of see it here where it's just forming this trend line here, and this is what I did is I saw this trend line going up like this, right? And so we entered a short position near and around this 336 mark. So right around here is where we entered this short. The stock has sold off, right? And so now we're just keeping our stop loss just generally just behind this trend line. So if it breaks out above it, we'll just take our profit and move on to another trade. But it's more than that. It's more than just looking at that. You guys can see at the time, the RSI was trading for about an 80, which the last time it was trading for an 80 was in here, and we had this huge sell-off. So just because, we see a stock squeeze up, you want to make sure that there's other indicators like the RSI and look back at previous history to ensure that this is an overvalued point. Look for that confirmation on a lower time frame like this, where we had that trend line, it broke down through it, establishing a new trend, and this is the new trend. And so now we're just continuing to get sell off, and we're letting our stop loss go down and down and down. Realistically, I would love to see this below $300. I think it easily could, and that's my easy swing trading strategy. I love the expression miss. Make it simple, stupid. Don't overcomplicate your trades. Just focus on small returns that compound over the course of a year. So guys, I hope you guys all enjoyed this. If you did, hit that like button, subscribe. If you guys have any questions, let me know down in the comments. Check out our school, code Black Friday for 51% off. Sign up with Moomoo for 20 free stocks, and we'll see you guys. Hope you guys all enjoyed it. Like, subscribe, and we'll see you guys in the next one. Take care.